If you're trading gold or currency pairs that involve US dollar or even indices, then you need to understand the power or the importance of the dollar index. Okay, dollar index is the strength of the US dollar against the other major currencies. So whenever dollar is weak compared to other major currency pairs and you're trading gold, so we'll be looking at an uptrend. That means you'll be looking for buys, because you'll be buying gold and selling US dollar at the same time. And if you're trading Euro USD, you will also be taking buys because it will be on an uptrend. So you're buying euro, selling US dollar. For pound dollar, it will also be on an uptrend. You'll be buying sterling pound and selling US dollar at the same time. This is simultaneous transaction in one trade. For Aussie dollar, it will also be on an uptrend. So we'll be buying Australian dollar and then selling US dollar at the same time. And for USD card, it will be on a downtrend. That means you will be looking for sales. That means you will be selling dollar, because we say dollar is weak, so we'll be selling dollar and then you're buying Canadian dollar. So if you're observing the dollar index and you want to consider whether you'll be taking a buy or a sell, so you'll be looking at the base currency. You need to consider the base currency. If the base currency is the dollar, and according to the dollar index, dollar is weak, then it means for any currency pair that starts with dollar as the base currency, then you will be selling, because you understand from the dollar index that dollar is weak compared to other currencies. So any currency pair that starts with dollar, you will be selling, because you will be selling dollar and then buying Canadian dollar. Anyway, in any case, whenever you're doing any trade, you are doing two transactions simultaneously in one trade. So whenever you're saying you're selling, you're on a sell, then it means you're selling one currency and buying another at the same time. That's why you're able to make money trading both a sell and a buy, unlike stocks where you buy and hold until they increase in price. But this one, since you're comparing two currency pairs, it means you're buying one currency pair and selling the other simultaneously. So since gold is the best currency, we will be looking for buys, because we are buying gold and selling US dollar. Now coming to dollar index and gold, I recently did a video on strong support and resistance zones for gold, and I also generated some strong zones for DXY. So looking at the dollar index now, dollar index has broken a very strong zone here at 101 level, and so the next level I'm observing is 100.75, and I'm looking at it if it will bounce or it will also break to 100.5. Gold, on the other hand, is on a very strong resistance zone. This is a zone that played as a strong resistance some time back, and we're looking at it again if it will break. We have a zone at 2050. We're not sure if we're going there. That is only if it breaks this zone, but in this case it seems that there's a high chances that it will not break this zone. We're not sure at the moment. We'll be observing the formation of candlesticks, but high chances it will reverse, but I cannot say anything at this moment. I'll be observing it against the dollar index. So far dollar index has taken liquidity. This is a liquidity zone that there were most probably stop losses here. So this was a liquidity zone that has been taken out. So there's high chances that dollar index would be reversing maybe it can go to this zone, then reverse to this area. Why? Because there is what we call fair value gap here, and this is another video I have done about fair value gap. You can watch that. So this is a zone where I call it another point of interest. It would be retracing, high chances it would be doing so, I cannot say for sure, but it's a point of interest I'm looking at the moment. So as I analyze the dollar index, how it's moving, it also informs me what's likely to happen for gold. Now in this case, if I'm looking at the possible reversal for the dollar index, then it means for gold there's also high chances for a reversal. So for gold is on a high resistance zone, so we're also anticipating a reversal. I cannot say also for sure, but these are just the speculations based on price movement, and we will be observing how the formation of candlesticks. So even as we look at this resistance zone for gold, we need to also remember that this is there's a liquidity zone above here. It is also always very important to understand where liquidity is, since if you don't know where liquidity is, high chances you become the liquidity. So we're waiting for this liquidity to be taken out. So gold might extend this to this zone to take out all that liquidity before retracing. It could be a retracement to this zone and then another movement on the uptrend. So we will be observing how it behaves, but whenever liquidity is taken, high chances of retracement because the market will have momentum to move. So this is how you compare dollar index and gold whenever you are trading. It also gives you an hedge in your analysis. Whichever strategy you are using, you can also add the dollar index, and even if you are trading other currency pairs, it will also give you a guide on what to look at in the charts. Thank you.